Good morning, everybody. This is Mr. Lee, member of the Education Committee. Welcome to all of you to participate in this morning's education seminar. Learning is part of growing, and today's topic is close and dear to my heart. Having money to do anything is essential. As a matter of fact, not having money is a critical part we all face. In Chinese, we have a saying, 有錢萬事足. And let me try to translate that in English. Cosmos, this might help you. Okay.
Yes, please. Thank you.
When you have money, everything works. So today we have an interesting topic, and we have invited Cosmo Sanchez from ACE Funding to talk about a subject. And you see it, how to put down as low as you can and invest as much money as you can, buying a bigger house or residential unit. Mr. Cosmo Sanchez is a Los Angeles, California native. He graduated from PCC, Pasadena City College, with both his AA and an AS degree from Cal State Dominguez Hill, with a bachelor's in English literature in 2015. Shortly afterwards, he stumbled across residential lending after being scouted. Now that part I don't understand. Maybe Cosmo, some girl was whistling at you, and then somehow that's how you were spotted.
Something like that. Yep.
He has been an active member in the real estate community ever since. So I don't quite get that part, how he got into residential lending. Cosmo is a member of both two boards, so he has a lot of credentials, both the San Gabriel Valley Board of Realtors and Arcadia Board of Realtors. So he has double our customers, where he offers his expertise on financing. And good part, he's in a lot of committees, so he volunteers his time doing a lot of charitable events. We need people like that. Cosmo, thank you very much. He currently works as a home loan consultant, offering a wide variety of loan programs for home purchases and financing. So for some of you who might have real estate borrowing needs, as I said earlier, 有錢萬事足, you might want to talk to Cosmos or have your customer work with him to help you finance that house purchase. Without further ado, thank you very much, Cosmos, for giving us this presentation.
Thank you, Mr. Lee, for that warm introduction. I really appreciate it. So I want to thank everyone for taking the time to be on this call, and also for our people that are with us today via Zoom in your comfy PJs, while me and Fawn are here in person, working hard face to face. So as many of you know, the market has shifted, right? And one of the things that I'm doing right now to increase my purchase is reaching out to my past database. And the reason why is because across the board, due to the high interest rates, a lot of people are not, buying homes and listing homes as much as they were. So having experienced the slow list myself, one of the things that I did was reach out to my past database. And you will be surprised to find out, I was surprised to find out personally, as I was making calls, that a lot of my past clients thought they needed 20% down to buy another property. But it kind of makes sense, right? If you currently own a home, a primary home, you're looking to buy another property, wouldn't that be considered investment? Wouldn't that be something that you would have to put 20% down? Well, not necessarily. And I want to show you guys a different way that you could do it with using the loan programs that a lot of you already know. Loan programs that you love and know. Just kidding. I don't know about the love part. But those programs are FHA, conventional, VA loans, jumbo loans, and basically any loan that you may think about under the sun. A loan that you may have done in the past, a product, a loan program, you name it. So what is this called, right? What is this way of doing business where you're able to use those loans even when you have a primary home? You're able to be considered technically a first-time buyer. Drum roll, Fong. It is called departure residence. That's what it's called. So that's what we're going to talk about today. So question, what is departure residence? Essentially what we are saying, your current home that you own, you are leaving that home, you're vacating that home, and you're going to rent that home out, and you're going to buy a new home, a new primary home. In doing that, you're able to either downsize or upgrade. You can also put as low as 3% down FHA, 5% down conventional, jumbo, you name it. Now, why is this a great benefit? Well, that home that you are vacating, that you are departing, now becomes a rental property. That future income is used to offset the payment of your new home, right? So basically, you're going to qualify for a new home now, and having a rental that's going to increase your income so you can qualify. This is not to be confused with a second home purchase that has additional restrictions, right? So for example, second home purchase says that you had to live 100 miles away from your primary home, and this is not your primary home, right? The second thing is you have to, if a second home to be considered a second home, there has to be amenities such as maybe is in a tourist area, right? Palm Springs, Lake Arrowhead Lake, Yosemite, you name it, something like that. So basically it has to be located in a place where you could really say that it's a second home. Then you cannot rent that home. So it's not going to help you qualify for more home, right? Who are the people who benefit? Who are the people that could take advantage of departure residents? Well, they're empty nesters. What is the empty nester? It's a person that had kids, and now these kids no longer live in a home. So maybe they had a 5-bedroom before, they had a bunch of kids, and now they're looking to what? Downsize. So not only can you take advantage to upgrade a home, but you can also take advantage and downsize. What else? Maybe a retirement individual, somebody who, doesn't want to keep up with the maintenance of a home that, if you're a homeowner, right? It's a lot of work, right? A lot of cleaning, a lot of hard work. Maybe you are a person that bought a home, bought a condo, and you're newlywed, you have kids now, and you're looking to upgrade. You're looking for something bigger and better. Let me see what other examples do I have for you guys here. Maybe school district. Maybe you're looking for something in an area that's better for you and your children, right? Where they could get a better education. So basically, as you can see the pattern here, what the underwriter is trying to tell to figure out is if it makes sense for you to take advantage of this program, which is a great program, right? Now, since you guys have an idea of more or less how departure residence works, this would be a great opportunity to do like I did, right? Reach out to your database, call them, and see if they're looking to either upgrade or downsize their current home. And the thing that I love about this topic is that it gives you an opportunity to get in front of your clients again, right? And also, these are not colleagues, right? These are the people who liked and trust you in the past with the biggest purchase that they will ever make in their life. Now, you'll be surprised how many of us take advantage of our database, right? And that's something that we should do, and the reason why, because we know that it's good for us. So I hope that this short presentation for you, maybe you thought that you're going to be here for an hour, but I've been told in the past, keep it short and sweet. Maybe this presentation, I hope that this presentation was informative to you and that you're able to leverage it and contact your clients. We will now lead to
Question.
Okay.
This is Fong here.
Hey, Paul.
Say I purchased a condo recently. I have not lived there for 2 years. And then I decide to do the departure residence. Am I required to live that 2 years before I move?
Your other property, the place, because you have not been living there, was that other?
I am living there.
Oh, you are living there?
Yes, but it hasn't been 2 years.
But it has not been 2 years.
Yeah.
Okay, do you have
Like
20?
capital gain and nothing counts?
No, but do you have 20% of equity?
Yes, I should know.
You should be able to do departure residence.
Okay,
Yeah.
so that's the requirement.
That's a requirement. Yeah.
Okay.
Good question. There has to be a certain amount of equity in that home in order for you to do departure residence. Anybody else has a question, or did I do a really good job in that 5 minutes of presenting?
Cosmos, I have a question. So
Okay.
it looks like that you are still living in a current residence, but you're looking for let's say new residence. Am I correct? And then you're retaining the old house. Let's say you get the funding for this as a rental property. So the rent that you obtain from a future potential tenant will add up as part of your income to qualify for your new purchase. Is that how your departure home works?
That's exactly the way it works, but it has to make sense to the underwriter, right? The underwriter knows that this is a great deal for clients, right? They know that it's a lot easier than somebody having to come up with what, 20% down, right? So as long as we could tell the story that basically this is the reason why you live in that residence, which has to be legitimate, right? It has to be maybe a better school district like we talked about, and all those other factors that we talked about. But yes, that is the idea behind it.
Question, the reason for purchasing is not as important as the figures. Is that correct? Meaning a school district aside, transportation closer to work, those are all legitimate reasons, but those are not necessarily the reason I will put forth. Is the underwriter looking at the financial, meaning the old house should have sufficient equity? Should the new tenant will give me, let's say, $1,400 per month rent? Are those financial important to the underwriter in me trying to contemplate this new transaction?
Yes, absolutely. So basically, the underwriter doesn't really care if it's something that's just going to increase your portfolio, right? They're looking for the story that says, hey, I am a primary homeowner now, and I'm looking to get another primary home. And this is the reason why. So that will have to make sense, right? On the reason why. In regards to reserves, the loan programs that we're going to use are those loan programs that we already know, conventional FHA. So reserves is not a requirement. In regards to vacating that property, that's a great question that you asked. And say, for example, you are going to, you found a home, right? That it's either bigger and better or you downsize. Let's say you found a home. Now that home closes in October, and your payment, your first mortgage payment, it's in what? December, right? So you have to have a leasing contract, and you have to have a payment made for that departure residence before your first mortgage payment. Does that make sense?
Yes, yes.
Yeah, so basically the underwriter, they're doing their due diligence, right? They're making sure that you are saying what you're saying, right? And they're going as far as saying, hey, we want a lease contract and we actually want proof of a deposit. Great question, though. Thank you. Anybody else that has another question? All right, great. So you guys have my contact information. If you would like to contact me later on with a specific scenario, please feel free to do that. I'm available, and thanks for taking the time to be here.
Thank you, Cosmos, for that informative seminars. We have learned of a particular new program that we are unaware of. And then for those of you who might come in a little bit late, this is a new thing. Feel free to contact Cosmos or contact part of the Education Committee, and we'll pass on the information to Cosmos, and we'll have Cosmo contact you directly. Thank you very much. On behalf of West and Gabriel Valley, we appreciate the time you spend with us. On a second note, and thank you for your time, Cosmos. Education Committee try to host seminars that are of a variety of interest to our realtor boards. So in October, we have two seminars coming up. On October 11, there's a real estate development program hosted by Mr. Ken Lee, who is a developer, and also Nancy Luke, who is a CPA. So if you are interested in that seminar, feel free to, and Fong will send that flyer out for October 11. On October 18, we also have another seminar for mobile home with Maria Palacios. So she's from Contempo Escrows. So if you are interested in buying mobile homes, those houses actually are a little bit cheaper than a conventional brick and mortar homes, but they are also in a, sometimes they are in a very nice mobile home park, which I've seen quite a few. So if you're interested, or somebody who might be interested in getting to live in that type of environment, it might be a good seminar to attend. In November, we have another seminar coming called Home Hardening, which I don't know too much about. So it's under AB Assembly Bill 38. So for some of you who might be interested, feel free to join. So that's all I have to say. Cosmo, do you have anything you want to add?
Yeah, Mindy had a question that I just saw right now. Good question. She asked if you could buy down the rate when using this program. Absolutely. How much can you buy down the rate? Well, it really depends on you, right? But what I do is I talk to my clients, because sometimes, let's say, for example, without the buy down, the rate is 5.5%, right? But say that you want to buy down all the way to, you want to go back to last year, you want a 2.99 interest rate, right? That we were all doing, right? Sometimes that rate right now is going to cost you like around, call it $20,000, believe it or not. So, you know, I just tell my clients, yeah, you are going to be able to buy down the rate. You are going to have a fixed payment, and the monthly payment is going to be less. However, does it make sense for you to go into your hard-earned money and get 20,000 to buy it down at 2.99%? So really, that's on a case-come basis. Anybody else has a question?
Oh, Pauline has a question. Buyer is buying a property with a company name. How do you deal with that?
Are they buying it commercial, or is it like a commercial property, or is it a? What we would do with that, we would have to close in an individual name, then they could put it back at closing to the business name. That would be the best way of doing that.
Maybe she's mentioning that instead of a single person buying it, there's a company entity like LLC or corporation who wants to purchase. Now, it might be interesting. If it's a company, then I'm not too sure somebody will be living there. Would that qualify under it's more like an investment property now. So would that qualify?
No, it's more of like investment property now. And then usually when those deals happen, they have to close as an individual, because the bank, you know,
so it's mostly for single individual like us.
It's more, yeah. Remember, this is a primary property that you're buying. This is not an investment.
Okay.
But your current primary turns into what? An investment. And you could use that investment income.
I was going to ask that question too. So if you're going to keep your old properties and use the equity or whatever to use as down payment, whatever, will the lender encumber that property as a second trustee, or how does it work? Because you actually only come up with 3%, and where is a down payment? You know, just 3%. Let's say I want to buy a $500,000 home, and the equity in that maybe help me sufficient to get a $500,000 home, but they want a little bit more down payment instead of 3%. So would that tie up my old property?
Yeah, so basically that old property, there's nothing that equity, let's just say that's free and clear, that doesn't help you. When you buy that other second primary home, it's buying a home all by itself. So in that case, if you needed to go into the equity of your home, you would have to refinance, take out that money, then do this. That would be the best way of structuring that.
Okay, all right. Thank you, Cosmos.
Of course.
I saw some new people coming in. Do you guys have any question that you want to raise with Mr. Sanchez? Or you can unmute yourself.
Raise your hand, put it in the chat box. Right. Well, guys, this program, I know it may sound a little too good to be true. It's very simple if you think about it. Basically, you just got to make sense. Why are you upgrading to a bigger home? And if it makes sense because your family has increased, well, then you could buy another primary home without putting the 20% down, and also taking advantage of what? The rate, right? Because when you buy an investment home, you get an investment rate, which is always higher. You buy a primary home, the rate is going to be much lower, but it has to make sense. We have to be able to prove that to be underwriting.
Yeah, Mindy has a question. Cosmo.
Okay, go ahead.
The time frame on the loan closing, how long does it take?
I mean, I could close a loan right now, like in 15 days. It really depends. Your lenders are different, right? So some lenders are going to close 15 days. Some lenders are going to close in a month. And you just have to get with your lender to see if they have any overlays. I know some banks, like for example, conventional loan, the FICO limit is 620 FICO score, right? But there's some banks that have an overlay. So, you know, you go to your lender and you say, I want to do conventional, I want to do departure residence, but their overlay is that you actually have to have a FICO score of at least 680. So it all depends on which lender you're going to go to in regards to that.
Okay, and Pauline has another question. Since now,
Pauline's right here. Where is she?
maybe she just want me
okay.
to work.
Yeah.
Her question is, now you know Fed is trying to tighten the interest rates since of the, I mean, due to inflation pressure, so everything is getting expensive. So her question is the interest rate, in your opinion, since you are in the lending business, will interest rate will continue to increase or stabilize, or will we see a little bit easing so we have a older interest rate in the 3 to 5% range?
Yeah, that's a good question. And we do see, I see at least them increasing one more time this year. Is it going to last forever? My guess is no. You know, hopefully by maybe next year or another year from now, 2 years maybe from now, they will go down. But as that person mentioned already, it's hard for me to say, right? But I do see them going up again.
Anybody still want to ask questions? I'll be glad to share your question, Mr. Sanchez. Okay. Jessica asked a question that since your presentation a little short, some people who came in late might have missed it. So do we have this thing on YouTube?
Yeah, and so
there's no first and second part. That's just one part.
Yeah, and to that person that made that comment, it was brief, and I'll just summarize it real quick, right? So basically,
yeah, go ahead and summarize it.
Yeah, I'll summarize it real quick.
Perfect.
So basically, we're talking about taking advantage to help people buy a primary home, right? Now, how are you going to do that? Say, for example, you live in a condo right now, and you're looking to upgrade your to a bigger home, a single family, because your family is growing, right? Maybe you had a couple kids, and now you're looking to buy a single family home. You do not want to live in a condo no more, for example. Doing departure residence, which we're talking about, that's the topic of today. Departure residence helps you buy that single family home with putting as low as 3.5% down FHA, 5% down conventional, or a jumbo loan. So basically, all the loan programs that you could use as a first-time home buyer, you are able to use them again. That's the great thing. And also what? Pricing. Because if you buy another home, you already own a home, you buy another home, that's considered what? Investment. But if you're departing from that home, we're going to call it a departure residence. The other good thing about that, is her name Jessica that asked that question? Or what, Jessica, right?
She was asking whether you can repeat the main point.
Right. So the other good thing about that is that property that you're departing now is going to be turned into a rental income that's going to help you offset the payment so you qualify for more on that second primary home. That's the good news. And that's pretty much the way it works. Also, you could reverse that and do exactly the same thing, but downsize. So now, you don't live in a condo now, right? You actually live in a single family home, a 5-bedroom, but your kids are all gone to college, graduated, and you and maybe your husband are just there cleaning the house. You no longer want to live in that big home. You want to live in a smaller home where it's not as hard maintenance, maybe, right? You're able to do that, rent out that single family home, that big home, that 5-bedroom home, and buy that condo, that smaller condo, a 2-bedroom condo maybe, and buy it as a first-time home buyer, take advantage of the low down payment, and also take advantage of the lower interest rate. So that's the heart of what we talked about today. Hope that makes sense.
Yes, it does. It does, Cosmos.
Yeah, this is a great program, guys. And remember, the key thing about this is that it gives you an opportunity to do what I did, reach out to your past database, your past clients, your database, call them and ask them, hey, are you looking to upgrade from your condo? A lot of people are. Are you looking to downsize? I know your kids graduated. And that gives you opportunity to close more deals and get in front of more people.
Just a suggestion. Based on what I just learned, I think it might be helpful for some of us to get a little consultation with Cosmos. Meaning, let's say if I live in $100,000 condos and I'm going to move to a bigger home to 150 or 200, and then check with Cosmo and say, what range of house can I afford? You know, based on this, what you call departure home program. So, I mean, you don't want to look for a $1 million home in Palos Verdes. I don't know if that's the $1 million home in Palos Verdes. So you got to look for something within your range, talk to Cosmos, and then say, hey, I have got $100,000 condo. I want to use that as a leverage to move up higher. I only have 3% down payment. I don't make that much money, me and my spouse. So how much house can I afford? Then you talk to him, and after he said, oh, you can get something from 150 to 200, then go back and work with your realtors. Or if you're a realtor, then you check, you know, your client's information with Cosmos, and then Cosmos will give you some thought. Would that help?
I love that idea. And I think it's really good to see the numbers and to see if it makes sense, right? And
Yes.
sometimes before we want to buy a property, we don't know if it's going to work. And I just tell people, hey, just sit down, look at the proposed payment. If it makes sense to you, do it. If it doesn't, I completely understand. Because in the end of the day, it all comes down to the buyer, right? If they want to take on, buying a home.
Yeah, now is a buyer's market. As I said, interest rate has gone up a little bit. So if some of our clients have that needs, and then talk to Cosmos, and then Cosmos will give you an idea of what range of house you're buying. Most of us tend to look at $1 million homes we can afford. So, don't want to have that high expectation and get disappointed at a future time. So that's all I have to add. Cosmo, do you have anything to closing?
No, that's all. And this is an opportunity for you to build generational wealth with your clients. Remember, you're increasing their real estate, right? You're making one home an investment, and yet you're being able to buy another primary. So this is, a win for you, a win for your client, big win for your client. And it just continues that path of generational wealth.
Thank you. Thank you very much, Cosmo.
Thank you for
Thanks
coming on.
again for your time. I appreciate you coming out and talk to us. I wish I was there, but for my circumstances, I couldn't be there. Audience, any last requests for questions? If you have any, otherwise we'll close up this session for now.
Thank you, everyone.